Hello, everyone, and thanks for taking the time to review the Morgan Hill real estate market analysis for February of 2008. My name's Robert Whitelaw. I'm a licensed California real estate broker, a member of the National Association of Realtors, and a certified ePro. Let's go ahead and jump into the numbers for February 2008 for Morgan Hill. We're going to start with the supply and demand numbers. Now, the first thing you're going to see here are the inventory numbers. And we're aside from obviously some of these numbers are not the best. We've seen a much bigger jump. If you can look in 2005, 2006, 2007, if you look at the rate of increase, right? If you draw a straight line from the top of the 2005 bar up to the top of the 2007 bar, you get a nice straight progression there. And then remember, this is just the month of February, going back to 1999. Saw a really substantial jump between 2007 and 2008 that was not in line with the previous 3 years. So if we were seeing this sort of steady, consistent increase per year, we'd expect all of these bars to sort of line up, and the hope would be we'd actually start to see this thing peak out and start to turn down again, or at least flatten. And we haven't seen that from inventory numbers. But don't let that get you too depressed. There's some numbers coming up that are actually okay. I think a lot of this has to do with folks that are jumping into the market who suspect that things are just going to continue to get worse. I think whether or not it gets worse really depends on the public perception of how bad things are and how bad they're going to get. But look at the increase we saw in the number of listings that were added in the month of February. Huge number when compared to previous years. There is no other year going back to 1998 when we saw so many people jumping in. Now, if we look at what that is, if we take a look at what the added inventory is, the new listings were up 40.3% from 2007. That's a pretty amazing jump. That gave us a total for new homes listed or homes added to the market just in the month of February of 94. Now, that's almost a full third of the total homes on the market. So if we go back to the total inventory right now, that's up 51.7% from last year. Another shocking increase, giving us a grand total of 311 homes on the market in February in Morgan Hill. Now then, if we take a look at the next statistic that we usually do on this graph and look at sales, we can see the last time we saw sales this low was back in 2001. Which is a year we often look back to when we do these reviews, because we've seen a lot of similarities between our market and what happened back in the dip of 2001, 2002. Everything was compressed into a shorter time frame back then, but it was still sort of the same indicators and and the same reactions as well. Now, as far as sales are concerned, they're down 62.5% from this same time last year. So February of 2007, if you compare the number of homes sold in that month to February of 2008, we are down 62.5% for a grand total of 12 homes sold. Now, that's actually not as bad as 2001. It's 2 more than it was in 2001. I know that's not very comforting, but when you look at these listed and inventory numbers, those have got to be a shocker for anybody who lives in this area. Now, if we go ahead and look at the same number sets, except just going back months now. Now we're going back to November of 2006 for this, just to sort of, you can see the seasonal influences, obviously. Now you see that inventory just rising and rising from December right on through until June. Inventory dipped just a bit in July and August, continue its dip into September. And then in October, we saw it peak a little bit, which was strange. We don't usually see a peak like that there. And then through winter, we saw the usual expected dip. We saw the same thing last year. So if you see December 2007 to December 2006, that's the holiday season. That's when people are leaving the market. Now, if you just look back over the months, you can see we're also really at the lowest point for sales in the year, and we're getting real close to the highest points for new homes added to the market. I guess the big metric this time around was that we broke the 300 mark, going back more than a year as far as the number of homes that are on the inventory. But none of this fluctuation is entirely crazy. I mean, it all makes sense given the season, because remember, the summer, winter, and spring seasons all have an effect on how the market moves, and these all seem pretty in line. What's interesting is the increase we're seeing in January and February, which we saw last year. Now, it'll be interesting to see in the coming months if we start to see the inventory flatten, if we get any kind of summer reaction or summer influence here. Now, if we just focus on these numbers based on the last month, so from January to February, just looking at what's changed, the inventory was up 13.5% between January and February. The number of homes that were listed in the month increased by 20.5%, and the number of sales increased by 50%. So that's actually good news. We had 6 homes close in January. We had 12 homes close in February. So in terms of just the total number of homes that are selling, they're still ridiculously low numbers, but at least we have seen an increase from last month. Now, let's go ahead and go to the next important factor here and take a look at home prices. Now, these are, as I said, just a month of February, going all the way back to 1999. The average home price is down 8.8% from the previous year. Now, our average price in Morgan Hill was $789,083. The median price was $737,000. So, and that $737,000 median number simply represents that was the price of the house that was right in the middle of the total number of homes. So in our particular market, imagine it being pretty much the middle point. So 6 homes were priced above that and 6 homes were priced below that. Just, it's sort of a good way to get a feel for the distribution of what homes are going for. Now, to be honest with you, I'm actually kind of happy with this decrease of 8.8%, and let me explain why. Maybe it's just putting a happy spin on it, but it's actually not as big of a decrease as we've seen in some other months. We've seen some double-digit decreases in previous months. Don't know if this will be a trend, but at least it's encouraging. Now, the highest-priced home in Morgan Hill was on Uvis Road. That sold for $1.2 million. The lowest-priced home was on Aspen Way in Morgan Hill, and that went for $512,000. And these are all just single-family residential homes. This does not include townhomes or condominiums. Now, if we go on to home prices, just to get a feel over, just looking back now over previous months, so February of 2008 all the way over to the right, November of 2006 all the way to the left, just a way to sort of see how things have been moving. You can see it was relatively flat over the 6 months preceding January. So the last half of 2007, we saw a couple of dips, but in general, it was relatively flat. Then we got a big dip in January. Now, if you look back to January, what did we see in January of 2007? Actually, we saw an uncharacteristic increase in the average price of a home, which was a little bit strange. We saw an increase from January to February, but we didn't see that last year. So I think we're actually seeing a pretty natural progression now. We're heading into the months that are going to be a little bit more interesting. I think we will see an increase in March as we did last year. I think more people are going to come out of the woodwork, basically. I think we're going to see a lot of folks coming out to take their deals now. Now, if we look at the average home price, again, it was $789,083. Now, the percentage increase, we had an increase from January to February of the average priced home, and that was an increase of 11.2%, which is good news. And again, that was based on a total sold homes of 12. Now, of course, one of the next most important things that's important to folks out there trying to get their home sold is the amount of days it's taking you to get your home sold. Again, this first slide is really just about the month of February going back to 1999. You'll notice I've added the word cumulative to days to sell. The reason is because there's 2 ways of measuring the days on market, and cumulative is the more realistic number. If someone takes their home off of the market or for whatever reason manages to get that the number gets it relisted, that would just be the days on market. The cumulative days on market takes into account when someone relists the home or it's been off the market for a couple of weeks and then comes back on. It remembers the numbers from before. So this is a much more realistic representation of the numbers going on out there. You'll see a lot of folks only report the days to sell number, which for a lot of these homes, in fact, one that sold in Morgan Hill just a few months ago, if you just looked at days on market, it would only show 25 days, but in reality, it was something like 190 days. So this is a much more realistic expectation. If you're a seller who's out there trying to sell, you're not interested in the little tricks that go into trying to reset the days on market. The bottom line is the day you decide to sell your home, you want to know how long it's going to take from that day to the day you get a check. And that's really more representative of that number. As you can see, steady increases since 2005. A little bit of a bump in 2006, but then it really took off 2007 and 2008. The total days right now is at 103, and that's a percentage increase of 10.8 from 2007. And if we move on and look at the days to sell just over previous months. Now, here's the trend that I kind of like. Now, this is the stuff that's the encouraging stuff. And I think these kinds of numbers are usually, just like these were the first kind of numbers to be our hint way back a year and a half ago that our market was starting to turn and not be so great, these are the first numbers that will change when things start to go a little bit better, when they start to buck the trend. Now, notice we're in February, and it was down from January. And the same thing happened last year, but we're down by quite a bit more. And also notice that in December we were at 149. Last year it was 103, and it increased in January. But this time around, between December and January, we got a net decrease. Now, granted, we're still at some very high numbers here as far as days on the market. But the trend I'm seeing is a trend that I like, and it's the same sort of trends we were seeing when things were going as far as it's the reverse of the trends I was seeing before that were indicating to me that we're heading into a tougher market. So is this an indicator that things might be getting better? I think it just might be. I think the really key point here is that I think that a lot of what we predicted months ago, way back in July, August, September of last year, I think we're going to be pretty close based on what estimations we've made over these last few months. I think we're going to see a foreshortened season. I don't think we're going to see a full season. I think we'll probably see average home price continue to increase in the summer months, but I don't think we'll see the volume of home sales going up. But I think it'll be flatter. I think once we get past the election, then we'll start to see the market start to make more of a turn in the positive direction. Of course, these are all just guesses on my part, but I think they're pretty good guesses based on previous performance. Now, if you've got any questions, ideas, suggestions, observations, I'd love to hear them. You can reach me via email at robert@soldbyrobert.com. If you'd like to listen to my podcast, which is something I do every week, you can find that at my website, or if you'd like to look at other articles or other video presentations I do on other markets, you can also find those on my website at www.soldbyrobert.com. If you or anyone you know needs any help with Southern Silicon Valley real estate or anything in Santa Clara County, really, please feel free to get in touch with me. You can reach me at 408-852-0525. And again, I thank you all for taking the time to listen to what I have to say on these subjects, and I look forward to talking to you all next time.